any kind of high tick read, guys, high tick read, 0 or above, you can short trade.
What a great short trade here.
Momentum is turning down.
$2,200.
Wait for the stochastics in the hook, and then your target's going to be around 637 right here. You see that? That's 637 target. 20 points below grandma's support level. Everybody got that? That'll be your target. Now, where's your stop going to be? Got it.
This is if we're not in a trade.
Well, the resistance is right here, correct? Here's how you flush this trade out, right? Resistance is 782, right? So your stop would be above there or above the white line. So as soon as you see it hook down, right? If you scale up selling, then your stop would be above here. If you wait for the hook down, then your stop is going to be above the high of the hook. Does that make sense? Everybody know what I'm talking about? So you let it roll up, roll up. In other words, if you were scale up selling right now, short, you'd go short here, short, scale up, and then your stop would be up here. Okay? But that's one way of doing it. The other way is to let it go up, let somebody go long, and when they start losing 16 points or more, nail them. So let the stochastics come up. I assume no one's short, right? I assume nobody has shorted yet, correct? If you're short, just enjoy the ride down. You want to get it toward this first touch rule area. It starts with the low right here, right? Right. 790 is the slow right here, correct? Or you can do it on, right? It's a 1 minute chart, by the way, not a tick chart. It's a 1 minute chart. Nice, Brian. Yeah, yep. Brian the Bear.
I don't know why, but shorts have been working well for me lately.
Yeah, well, they have. The elevator is going down, the stairs go up, right?
That's exactly right.
Yeah. The sad thing is there's some perennial bears, like when I was in the brokerage business, it was Joe Granville. I mean, the market was like a 4-year bull market, and he was always bearish. It's going to crash next week. But once it does crash, you can make a lot of money on the short side because people don't short. You're accustomed to buying your mutual fund and keeping it for 20 years. But as we know, COVID, 2007, the real estate bubble, the internet bubble, you go back to all these bubbles when the market comes down. Pretty nasty. All right, we're getting ready here for one more push down. difference on the 1 minute chart and a tick chart is this. The tick chart adjusts quicker. You see the first touch rule? Tick chart is already hitting the first touch rule, but that's okay. You could always grab the reversal, right? Once you see the reversal, you just take it, right? Go back to the 1 minute chart. Your next target would be about 694. Everybody see how he got that? Boom. 684, second target. How many took that short? Bring you stop to break even. Good job, Milt. The swing high was 737. And you can keep doing this. The next run up, let's say it gets to about 762, right? Let's say it gets 762. Well, let's take it a little higher. Let's say it got to 772 and came down to 56. You'd go short at 56, right? So each level you can go short when the guy who goes long starts losing money, right? Somebody's going to go long at the high peak. Now, if you went long at 37, yeah, great. That's wonderful. You're making money. But what if you go long up here? That's the person you want to nail. The one who went long after the move. Got in too late, right? The low so far is 681, right? Yeah, we'll move this like that so you can see them better. See these charts better? It's a 1 minute chart now. The exact low so far of the day has been 643.
Okay, let's get out of this trade and see if we can jump in another one.
737. Almost, this thing is swinging up almost 100 points, right? So you have to use the most recent high and low as your entry and exit points, right? You don't want to lose. You don't want to use the opening range high. You know, 200 points higher. Grandma's target was hit today, 657, right?
Let's go ahead and take 1600.